All right, so now what we're dealing with is the child tax credit and the additional child tax credit. So what has happened so far is you've gone through your tax return, you've come up with your income lines 1 through 8, you added it together on line number 9. Then you looked at some type of adjustments that were above the line or they were adjustments before we got to AGI. That was your line number 10, right? Things like maybe student loan interest, educator, K through 12 educator, things like that, HSAs, those areas. That got you to your adjusted gross income. From the adjusted gross income, we then started going, do we take the standard deduction or the itemized deduction? We went through even further and we started looking at maybe Schedule 1A deductions, QBI if that applied to us. So we had some additional deductions in there, right? So now what we've done is we've gotten to our tax credits. Now, the tax credits are nice because after we got over to our taxable income, what happens is we take it to the rates, right? We start saying, okay, how much do we owe? And once we figure out what we owe, we start panicking a little bit, saying, "Oh no, we've got to figure out where we're going to get this money." But we're not done with the calculations yet because we have to deal with those tax credits. And in the last video, I did the earned income tax credit. Now what we're dealing with is the child tax credit and the additional tax credit, child tax credit. So we're dealing with those two. Now the good thing about a tax credit is that it is a dollar for dollar reduction of our tax liability. So when we did all those deductions up before, right? When we did all the deductions like the standard deduction and the Schedule 1A deductions and the adjustments, that helped lower our taxable income, which was great because then we went to the rates. But what happens here with these tax credits is it reduces our liability dollar for dollar. So if we have a $1,000 tax credit and our liability was $2,000, our tax liability was $2,000, you know what? Knocks us down to $1,000, right? Because it's a dollar for dollar. It reduces our tax liability dollar for dollar. So it's much more valuable than what we'd have with a deduction. So here's what's going to happen. When we're dealing with the child tax credit and the additional child tax credit, they're one credit. Even though it says the additional child tax credit, it makes it sound like it's two. It's poorly worded, but it's only one. And here's how it's separated. So when you're looking at the child tax credit, that part is going to be the non-refundable portion. And then you have the additional child tax credit. That's the refundable portion. So one credit, but it has two different portions to it, right? So we're dealing with two different portions of it. Now, when we have a non-refundable tax credit, what that means, and that's the child tax credit portion of it, that means it can reduce our tax liability all the way down to zero. Once we hit zero, then we don't get any more of it. Even if there was additional child tax credit left, we just don't get any more of it because it's not refundable. The refundable portion of it means even if our tax liability was brought down all the way to zero, if we have any remaining portion of it that is refundable, that means we'll get a refund. We'll be getting a check from the government because we have a refundable tax credit and our tax liability is zero. We absolutely love tax credits and tax. They're very valuable. All right, well, let's go ahead now and start looking at what some of the qualifications are and what these tax credits actually are. All right, so what we're looking at is the maximum amount of our child tax credit and our additional child tax credit. So first things I want to say is as we're going through it, you're noticing that there's two different portions of this, right? The first portion is going to be just your child tax credit. The maximum amount total is going to be $2,200. Now, when you're looking at the non-refundable portion of our child tax credit, what we do is after we have this, after we figure out what it is, we're going to bring this over to Schedule 3. It's going to go on line number 2 on Schedule 3. I'll have a separate video that walks you through Schedule 3. Now, when we get over to the refundable portion, that is going to go directly to your 1040 on line number 28. So as we're doing our line by line in this series, this is going to line number 28 on our 1040 for the refundable portion, which is the additional child tax credit. It does not go over to Schedule 3. Only the child tax credit non-refundable portion goes to Schedule 3, line number 2. All right, so let's look at the maximum amounts here. So the first one that we're dealing with is the total amount for 2025 is going to be $2,200. So that's what we're looking at if we qualify. The non-refundable portion brings us down to just the zero for our tax liability, so it can bring us all the way down to zero. Now, part of this tax credit is going to be refundable. $1,700 of this total credit is going to be refundable. So the maximum amount of our credit is $2,200. Of that $2,200, we're going to have $1,700 that can be refundable. For the refundable portion of it, though, we must have earned income. So we need a minimum earned income of $2,500. So it's kind of like a phase in, right? So you need to have that earned income of $2,500 minimum. And then at that point, what you're getting is you're getting 15% on the earned income exceeding $2,500. So the more you're making initially, the more that you're going to be able to take in terms of this credit as it relates to the refundable portion of the credit. All right. And then eventually we'll see that you can phase out of this as well. So let's go ahead and look at some more requirements on here so we can continue to figure out this tax credit. All right, so this here is going to be the requirements that we have to have in order to qualify for the child tax credit. Now, as you can imagine, you're going to have a child, right? And when we're dealing with the child tax credit, we get that $2,200 that we just looked at before. That is a per child tax credit. So if we have 2 children, now we're looking at $4,400. So this isn't just for a single child or just, hey, look at, we only get a tax credit if we have a child. It's based on the number of children that you have. So the more children, the more potential for this tax credit. Now, what we're looking at in terms of the requirements is you're going to have an age requirement. So they have to be under the age of 17 at year end, right? So this isn't one of those like when we're looking at something such as can we claim somebody as a dependent and we say, okay, well, are they under the age of 19? And no, this is under the age of 17. So you're looking at 16 years and younger in order to qualify for this. The next thing is that it has to have a relationship. They have to be a qualifying child, not a qualifying relative, but they have to be a qualifying child. So we can see child, stepchild, foster child, siblings. So if you haven't watched my video on dependents and the status of that, you would have noticed that if you had watched it, that the siblings, you can potentially claim a younger sibling as a qualifying child. Not an older sibling, but a younger sibling, if you meet the requirements for that. The next one is going to be residency. So they have to have lived with you for more than half of the year. Okay, so they've lived with you for more than half of the year. They have to be your dependent, so you have to be able to claim them. They have to be your dependent. And then finally, they have to have a valid social security number in order to qualify for this tax credit. Now, let's go ahead and let's look at the next thing. Let's look at the income phase outs, because we looked at it saying, okay, you have to have earned income, right? A minimum of $2,500 of earned income to kind of phase into this tax credit. But what happens now when you have too much income to qualify for? So you start to phase out. And I'm going to tell you, it's not going to be a cliff. There's going to be a gradual phase out, and we'll work through an example with that as well. So let's go ahead and take a look at the phase out requirements, or with the phase out, maximum phase out, and how that applies. So our phase outs depend upon our filing status. So you can see initially it's in the green. It's going to show you single or head of household. The phase out begins at $200,000. If you're married filing jointly, we're going to go ahead and we're going to double it up. It's going to be $400,000. So once you start hitting these areas, that's when you start to phase out of our tax credits, our child tax credit, and the additional child tax credit. So the phase out, it's not a cliff in the situation. It's not like, okay, my income, I'm single, my amount is going to be $201,000. I get nothing. What happens instead is it's a gradual phase out, and it phases out at $50 for every $1,000 that you're over the phase out amount. So in my situation where I said you're at $201,000, you would have phased out by 2 increments of $50. So you would have phased out by $100. So if you had one child in that situation, so you had the $2,200 tax credit, it would have knocked us down to $2,100 if you had that one child. But let's go ahead and let's work through an example so you can see the actual phase out on screen instead of just me explaining it to you. So let's take a look at that example right now. So for purposes of our example, what we're dealing with is we're dealing with a client that is going to be married filing jointly, so we know that the phase out amount is going to be $400,000. Now their Maggie, their modified adjusted gross income is going to be $405,000. Well, their modified adjusted gross income exceeds the beginning phase out threshold, so it exceeds it by $5,000, the difference between $405,000 and $400,000. So they have excess income of $5,000. Now we need to reduce their child tax credit by because they've exceeded the threshold amount. So when we look at what the phase out requirements are, it is $50 for every $1,000 over the threshold. So what we do is we say we are $5,000 over the threshold, and we're going to divide it by $1,000 because they're in ranges of $1,000. So we have 5 ranges, right? So it comes out to 5. So we have 5 increments of $1,000 to get to that $5,000. Now what we do is we're going to take that 5, because of the 5, there's 5 increments of 1,000, and we're going to multiply it by $50 because it's $50 per $1,000. So when we go 50 times that 5 increment, that's going to give you $250. So we're going to go ahead and reduce our maximum child tax credit of $2,200 by $250. That's going to give us $1,950. So for this particular taxpayer, their allowed child tax care credit is going to be, or their allowed child tax credit is going to be $1,950. So that'll be their max for their child tax credit. All right, let's go ahead and look at some of the issues that sometimes arise, because sometimes you have taxpayers that are finishing off their taxes and they look at it and they say, wait a second, I'm not getting the same return that I got in the previous year. Well, let's go look at some situations as to why that may arise, because it may have to deal with your child tax credit. All right, so these are some of the common areas why you may have seen a lower tax return, or that you may have owed more based on our tax credit, our child tax credit, and the additional child tax credit. So first situation is going to be, well, you had a lower tax owed. Remember, not all of the child tax credit is a refundable portion of it. So what happens if it's not refundable and you didn't have a very high tax liability, you may not get the entire amount of the non-refundable portion, because it can only bring our tax liability down to 0. So you may still be getting some type of refund from it because the refundable portion, but you may not have used the entire portion of the tax credit. So that could be one of the issues, and in the past you had been using all that. Another issue is going to be lower earned income, right? So remember, when we're looking at the additional child tax credit, what it does is it phases in, right? You needed that $2,500, and then it's going to be 15% over the excess of the $2,500 up to the maximum amount that we can do. Well, in this situation, maybe you didn't have as much income, earned income, as you did in the past, so you're not getting as much of your child tax credit, the refundable portion of it, as you had in previous years. So that could account for some of the issues. Another one is lower withholding. So maybe you're not having as many withholdings taken from your check, so that could be an issue that results in getting less back when you're dealing with your taxes. So the employer didn't withhold as much as they had in the past. And then finally, it could be an income phase out. So maybe you're going to go ahead and you've made more money this year. And we saw that there's that $50 reduction for every $1,000 that your Maggie exceeds the income thresholds, right? So married filing jointly, we saw was $400,000, $200,000 if you're going to be single. Well, if you made more than that, that could impact whether you get your child tax credit. You may have phased out of it. And I'm going to add one more on here. Sometimes you have that 16-year-old last year and you're thinking, they're a sophomore in high school. I've still got a couple more years left with this that I'm going to be able to take it. No, once they turn 17, you lose it, right? You lose that. So even though you still have a child that's in high school and you're thinking, I'm still going to get this tax credit, this surprises a lot of taxpayers because it is kind of an arbitrary area of 16 or below is what you're looking at. So that can also be an issue for you. So if you've done your taxes and you have a lower amount, that might be attributing to why you're getting a lower refund amount. All right, I hope this video has been helpful for you. If it has, go ahead and subscribe to this channel, and I will get some more videos out there for you. Hope your taxes are going well.